What is going on YouTube? My name is Lucas. Today, I'm going to tell you why if you have money in a savings account, a sweep account, and you've been waiting to put money into the stock market, now's the time. I'm going to tell you why right after this. Everyone that does anything stock market related talks about stocks was so negative on the entire stock market. I mean, rightfully so. The coronavirus had such a major impact, and with everything shut down, we were obviously all quarantined, which I agree with. I do believe that we should have been quarantined, but with all that going on, there was just so much negativity around the stock market, and it backfired on them. I've been doing things in the stock market. I would say Thursday of last week was probably by far the biggest drop I've ever seen. I mean, that thing dropped 1,800 points roughly. I mean, for the Dow, that was insane. But the thing is, guys, is you can look at it two ways, and that's how I look at it. Yes, I lost money on Thursday. Big deal. I'm 31 years old, going on 32 years old, and my entire mindset when it comes to putting money into the stock market right now is full bore, as 100%, 110% if possible, aggressiveness. I'm trying to get as much as I possibly can. So when the stock market dips that way and things become affordable, especially things that I really want, I'm going to go into it. I'm going to put money towards those items, those stocks, and I'm going to get them in my portfolio. And you should be doing the exact same. In all honesty, who predicted a V-shaped recovery? Not a lot of people, if any. I can honestly tell you that. I predicted the market would go down, and rightfully I was wrong. But, you know, I'm okay with that. And the reason is because I made all my money back plus $6,000 since the coronavirus. The lowest point in the entire coronavirus was March 23rd. And I'll tell you a little bit more about those numbers. But also, who predicted the Nasdaq would hit 10,000? The first time ever in history. I mean, these are things that are occurring during what we would recall a recession. I'm going to peek over here real quick just to give you these exact numbers. But on June 8th, the Dow hit 27,572. All the way up from its low of 18,591 on March 23rd. So as you can see, and I'm going to show you a chart, the Dow and even the Nasdaq and the S&P 500 all created a V-shaped recovery. And of course, you know, obviously with Thursday, we had definitely a big slide. I think the entire market, especially the Dow, was down 7%. That's expected when you have such a run like that. I mean, eventually at some point there's going to be a sell-off. But like I said, now is the time to really focus in, hone in on those stocks that you're looking at, whatever you're wanting to get in. Make sure that you're studying their 52-week highs, you're studying their 52-week lows, you're paying attention to the volume, and when those price points are hit that you want to get in them. That's the way you make money, guys. And I posted yesterday of my portfolio in my TD Ameritrade account, and a lot of those that are in there currently are ones that I've talked about in many of my videos previously. So I'm getting into things that I'm telling you guys about, and it's making me a profit. I was listening to the Joe Rogan podcast the other day, and he was interviewing Kevin Hart, and Joe asked him a question, and they, you know, obviously they're bantering back and forth, and Kevin Hart started talking about investments, and it really kind of made me think, and it was pretty much common sense. I mean, it really was. So Kevin Hart basically asked his kids, you know, what things that they use on a daily basis, especially during the coronavirus. This is kind of what they were directing it at. And so he was asking his kids, you know, what do you use? Where do you think we go? And one of his examples was, hey, do you go to Target? Do we buy items from Target? You know, things like that. And of course his kids are like, yeah. And so his investing strategy is all based on things that he feels people utilize and capitalize on the most, and that really made sense to me. So when I compare that to my portfolio and the things that I've invested in, especially really heavily, that all comes back to the Dow 30. You know, I've talked about it at least in 6, 7, maybe even 10 videos of mine that I've invested into the Dow 30, and I got as much as I possibly could. There's some stocks that I've gotten a lot more, but my goal was to get anywhere from 5 to 10 in each one of those stocks. And as of late, and with these drops, I've been able to successfully do that. And that is how I turned $10,000 into, until Thursday, I had $41,000, but then we obviously had that major 7% drop off and I fell back to $37,000. But guys, mind you, I've been doing this only for a solid right about 2.5, a little bit closer maybe to 3 years. And so that's what I'm telling you guys. Everyone that watches my videos is capable of making money in the stock market. It's not a hard game. If you put money to things that you really enjoy and you get in at those major price points that you know you're going to capitalize on, it's a win-win game. As a few examples, I got in at 5 shares of Tesla, and Tesla hit over $1,000 the other day. I got in Tesla pretty early on. It was like $700 to $800 is where my average is at. Another example is, obviously I've talked about Apple and how much I've really just always wanted to invest in Apple. Apple hit an all-time high the other day of, I believe, 354.77. And the same goes for Microsoft. I'm invested in the Microsoft. Microsoft also hit an all-time high of 198.52. These are things that you can easily do and take advantage of during these dips when the stock market is struggling. You know, obviously consistency and paying attention to those things every day is something that you'd have to put an effort into. But really understanding when these things fall off, price points occur, you know, the biggest thing is paying attention to 52-week highs, 52-week lows, and getting in when you can, guys. That's my most advice. So the next thing I'm going to talk about are some things that I'm going to start investing into. And number one is going to be DraftKings. Obviously, if anyone knows me, I'm a major sports fan. I play every major fantasy sport there is, baseball, really football, and I do it pretty heavily. And so DraftKings was just an easy one for me. And they recently IPO'd, and their stock is absolutely just getting ready to explode. Obviously, we don't have sports going on. The only one that's really going on is NASCAR, and that's even on DraftKings. But the thing is, guys, is you got to understand, sports are going to come back. They're not going anywhere. It's just basically we've taken a timeout, and they're going to come back, and when they do, obviously DraftKings is going to start getting so much more interaction. People are going to start doing the fantasy. They're going to start, you know, obviously engaging in this app more often. That's going to cause this stock price to just skyrocket, and they're going to get more revenue, and it's going to happen. So that's why it's number one on my list. Number two on my list is going to be the casinos, and the two that I specifically picked out are going to be MGM and Las Vegas Sands. Another one that I would recommend is El Dorado. Guys, the casino platform opened up last week, and obviously the revenue is going to start flowing in again. People are going to start staying at these resorts. They're going to start staying at the hotels. They're going to start putting money back into the casinos. People are going to start gambling. The consistent people that show up all the time, that are, you know, get paid on Fridays and they head to the casino and start gambling. Those people are back. So obviously these companies are going to start getting the revenue that they have had back into them. And we're going to start to see those stock prices climb. They're obviously going to, you know, it's going to take a little bit of time to obviously have good quarterly earnings, good solid foundation, but it's going to come back. And when that does, that's going to cause these stock prices to go up and get probably closer to their 52-week highs, or at least get a little bit more, I would say, at a higher price where they should be, at least where we expect them to be. So that's why I picked these as my number two. Number three on my list is going to be the leisure and hospitality. And I've talked about this in a video, as you can see right here. And the reason why I picked this is just because people are obviously going to start going back out into their communities and start really getting back into their economy. Obviously, you know, going back to restaurants, traveling again, getting into hotels, traveling more with airplanes and whatever the resources they use, obviously their cars. People are going to start doing this again. Obviously, we see people getting out and about. I'm seeing less masks, a lot more hand sanitizer, a lot more hand washing, things like that, but we're just seeing people become, I guess, their norm again. And so with that being said, the economy is going to start getting money back into it, and we're going to start seeing people go back to restaurants. I think I was talking to my wife the other day, and I'm like, man, I can't tell you the last time I sat down at a restaurant and actually like ordered from a menu and just really just kind of been in that environment. It's just been so long. But obviously we're all getting back to that, and that's why I picked this as my number 3. It's gonna come back. Hopefully you guys enjoyed this video, and guys, I am telling you, take advantage of these dips when they happen. Get into the stocks that you want, get into those price points, and start making money with me. I'm telling you, it is very possible. So if you like this video, smash that like button. It helps out tremendously. And if you enjoy the content, because I'm gonna keep the content flowing, subscribe to the channel. And as always, have a good day.